All right. Good morning, everybody. Welcome to Market Structure Training, Volume 18. Yeah, this is the 18th volume, right? The last one we had was Volume 17, and then we talked about Euro USD, did a back test. We started with as in we've been doing a back testing series on Euro USD, and then we've been trying to work our way down all the way to where we are presently. Okay, so the last call we had discussed all of these, and then
put it to the nearest.
so let's just try to locate where this is now, and then I think I can play it by the side. Sure.
All right. So
Yeah.
good morning,
So
everybody.
something like this.
Welcome to
So we can just put this pause.
Market Structure Training. Okay. In this episode of Market Structure Training, we are going to be back testing, the euro dollar, right? So we've done
Yes, good morning.
volume
So
18
let's
candle.
go. We're supposed to do chart markup review yesterday, but I mean I was exhausted. So let me delete everything on the screen. Am I done? Yes. I'm not sure I need it anymore. Or do I? Okay, I'll mark it up again. I saw on the daily time frame quickly. January should be this area. So yeah, this. So quickly you just use the replay tool to take this off. Right? Yeah. So this is it. And then let's
January 3rd, and then we were looking at how many harmonic patterns. So this is only that is the two imbalance I can see in this area, right? So now two imbalances. Okay, and I remember there was an harmonic pattern that formed here, right? We discussed it during the harmonic pattern.
So under 15 minutes,
call, right? And then this entry was
yes, okay, I see it.
2:45. That is 2 hours 45 minutes into the New York Open. So there was one go with price and time, right?
Yeah, so this was the buy opportunity. Yeah.
Clock is
yeah, this area. Yeah. So we put the buy, as in we analyzed the buy opportunity from here, and then
so now
and then we've captured the daily highs. So I just want to know where we stopped quickly.
Remember, we are low. Okay, from this low to this high, all the way up here.
All right. So we checked, we also, analyzed another buy opportunity in this area. And then this was the daily liquidity that got captured. And that was where we ended the session, right? So we're just going to continue from there, yeah. So I know where we stopped now. So yeah. So that should be it for Telegram. And then let's proceed. This is super loud. I don't know why this is so loud. Okay. Because I'm coming, I need to check something. Output volume, input, output, input volume. Or is it the output? Coming in, going out. This is loud. All right. Okay, yes. So daily time frame. This is the liquidity. I said something yesterday. I said if you have not if you didn't watch the last recording, you might not really understand where we are. So this is like a continuation of the last call. So please watch the first one so you can understand what we're doing here. Okay. I'm just going to be back testing, with regards to market structure, Euro USD that we've already picked the pair we want to be analyzing right, from like January all the way to present. How many opportunities would we have caught, in line with the structure of the market and all of that? Okay, yeah. So this was the liquidity that got captured, right? smart money captured this liquidity, and then we were able to identify buy opportunities in this area, and then we caught we saw a lot of buy opportunities here that we could take, that we could keep getting in order to capture what the daily highs and then fill this imbalance up here, right? So that was the play. Right, so now the price has filled the imbalance, right? So we have multiple imbalances, right? We have the first imbalance here, we have the second imbalance in this area, yeah, and then we have the third imbalance, this big one, right? So there are three imbalances that price could potentially fill, right? But then if we draw our fee from the swing high, which we had here, all the way to the swing low, we can see that price has already touched 50%. Premium areas for sell is 50% and above, right? So 50% and above, we can start to look for sell opportunities. 50% below, we can start to look for buy opportunities when we draw the fee, because this is for a sell. And then if we're drawing the fee, it's going to be from down to up for a buy, and then 50% and below for a buy opportunity. So we can see that this has already traded, price has gotten to 50%. So even if price begins to reject just like it did, it has already giving us a 50% a premium entry already. So smart money does not have to go all the way into like deeper premium areas, right? They could play 50 and reject. You see, just look it up, just like what happened here, right? You can see we had many down days at this 50%, right? And looking at it, I can see, I think price really even traded through this imbalance and played the second imbalance. So can you see two of the imbalances were filled, but they didn't get to the third one, okay? But at least they filled two of it, right? And then price rejected, and then we can see he came, did he fill this one? Let me just check. I just want to know if he filled it. Yes, so they see, then came down and then came back into the third imbalance and then filled it a little, and then price dropped. Okay, so we're going to be looking at the price action, and then in regards to market structure, and then we stopped at this bullish candle going up. So today we're going to continue this. All right, so again, we always start with having a bigger time frame directional bias, right? If you have a bigger time frame directional bias, that can help you to continue to look for opportunities in that direction. So higher time frame, we can see that the dollar is I said dollar, sorry, EU is bearish, right? Based on structure, we have this lower low, we have this lower high, and then we have this lower low. Okay, all of this was just price was consolidating, created liquidity to the upside. So we could be looking to buy based on the concept of liquidity and then imbalance. This could be short-term buy, not really short-term because this is a couple of days, if not weeks, right? But compared to the sell is actually longer than the buys. Okay, we had big sell down, and then we had buy, and then big sell down, we had buy, and then we had big sell down. So if we only want to be trading along with the structure, if everybody in the world only wants to trade along with the structure, then the market would just be selling. Okay, so some people have to be courageous enough to go against the trend, and then people join the trend, and then some people go against the trend, and then some people join the trend, and then some people go against the trend. That is what creates a complete structure, right? Some people have to have strong heads, strong heads to go against the trend, you understand, to create that lower high. Because if everybody just wants to go with the structure, it's just going to be going down again. So yeah. So it's they always say always trade along with the trend. That is for people that are just new to trading. You understand, don't know how to catch retracement and all of that. But you guys, I'm sure majority of you here know how to trade against the trend, the major trend. You can go against the major trend as long as you know what you're doing. All right. Buying here is going against the major trend. But we saw a lot of buy opportunities here. So that is it. Okay. Yeah. All right, so let us continue. So price filled this IPA in this area now, and then price rejected. So now it rejected because we know it rejected because we saw it already. Now let's assume that, okay, this is where we had today. Now we are traveling back in time now, like today, as I'm teaching you, is January 13, right? What would we be anticipating? Number one is we will be anticipating for what? Higher pricing. Yes, even though price has actually hit 50%, I will still be anticipating that maybe it's going to go into this imbalance here. Yes, I am going to be thinking like that. Yes. So that would be one of my thought process because I'm trying to establish a daily directional bias now. And so seeing our price has filled the first imbalance, the second imbalance, I would be anticipating that maybe we could still see higher pricing for price to get into the third imbalance above, right? That would have been, one of the thought process. And then going, so I'm just going to, so this is the second imbalance. And I'll put the third one here, okay? Yeah, and now we go into a lower time frame. So now I'm having two directional buyers now. Number one, short-term buy. It has already bought, that's traded into the 50%. I would still be anticipating, okay, maybe a little push up to fill the imbalance. That is short-term buy, right? But I'm still overall bearish on this because price is majorly going to the downside. And because we've already got into premium areas, taking buy opportunities will be less, the probability of it going away will be less, but we won't say it will not play out completely. It could play out, but it could be dangerous. No, it will be dangerous, not could be dangerous. You understand? Because now price is already at 50%, so we're already trading in premium areas. You understand? So that would have been one of the thought process. Maybe we can get price to push into the imbalance above. And then this is the daily time frame. So we're going to be sticking with the daily, the 4 hours, 1 hour, 30 minutes, 15 minutes. Okay, so the reason why I'm doing this is because, like I said in the last call, not everybody have a paid TradingView account. So some people do not have access to all of these time frames I have up here. You get, so I just want to make the call as, basic as possible. So when you are doing your own back test, you can have the time frames. Because if I go into the 57 minutes time frame, there's no way you can have that if you don't have a paid trading account. So I'm just going to stick with the basic ones. Okay. So we just go to 1 hour quickly and see. All right. So we're going to be checking since I'm still anticipating for what bullish price action. Yeah. Now, as price was buying up, remember we caught the buy opportunity from here, and then we also had a buy opportunity from here, right? Go and watch the previous recording you see there. So now based on structure, this is the first imbalance. So this is the second, actually. This is the third. You know what? Let me identify the three imbalances. All right, the first, the second, and the third. So this is the first one. Yeah. Okay. This is the first imbalance, yeah. And then this is the first, this is the second, this is the third. All right, so going into the 1 hour, now we can see price has traded through the first one, came into the second one. Now, if we're going to be checking this, okay, we bought all the way, so we're buying up, and then price has come here. Now, price is above what? Premium. In as much as you want to buy, looking for buy opportunities for price to get to the third imbalance, you should also have at the back of your mind that it could begin to sell because the directional buyers long term is to the downside, right? Okay, so now price came into the second imbalance, and then what did we see? We can see we had a break of structure. So did it respect it? It didn't, from what I'm seeing here, right? So let's say, okay, we had this high, we had this low, so price came into this area, and then we had this higher high, this higher low, and then we had this higher high, right? Now, like I said, two directional buyers, right? You could be anticipating that maybe higher pricing into what? The fill of the third imbalance. Maybe smart money wants to give us a deeper level of retracement, right? We could be anticipating that. If that's going to be the case, we have a play for the buy, yeah, in this area, right? So now price, gave us this high, this low, this high, and then this higher low, and then it gave us a higher high, right? So in terms of structure, we might be wanting to take a buy from, this down range and then this top range. But then below this area, what do we have here? We have this imbalance that is here, right? So let me see. The price get to 50%. Yes, from what I can see, price got to 50% of the imbalance. We also had some liquidity sweep in this area. You can see we had this and then this area with some liquidity that was swept here. Let me see. I'm just going to go to the 15 minutes time frame if I can identify the candle. Yes, so the candle, this is the candle that swept the liquidity, right? This is the candle, and then from based on structure, this low, this high, this low, this break of structure. I've played it stop below the low, taking you out in this area. But there was a buy we took here. I think it was based on this imbalance or so. The last call is in the recording. Understand? Yeah. So going back to the 1 hour, if you were anticipating higher pricing into this imbalance, the third daily imbalance, you could have caught a buy maybe at 50% of this imbalance. So if you want to take a trade 50%, can see price played 50%, that could be entry will be here. And what can we see? Higher high, higher low, higher high. As at the point when this activated you, it closed within the structure. So you had like a discount entry, but price still respected, this bullish structure. It was later that few hours later, price broke the structure, but you were already in on the trade. So there's a difference now. You're not taking a break of structure trade. You were already in on this trade. Price closed here, respected the structure. You were already in. It was still bullish. Do you guys understand? Let me know if you guys understand. You didn't take this trade after the break of structure. You took the trade before structure break. As at the point when this candle was coming down, this would actually be a break of structure. But it is still potential. It has not been confirmed yet until the candle closes. The candle closed above this, so it respected the structure, but you were already in. So if that was your analysis, you actually got in on a trade. And then, like I said, maybe I'm anticipating that price will get to what this third daily imbalance here. And since I'm trading the imbalance, this is the candle that creates the imbalance. This is the first candle that gave the wick, and then this is the third candle. My stop will just go down here. So entry would be 80 level, obviously, 9 pips. Let me see. 9. No. This is above. I would rather play 10. So 10 pips, and I'll be going for just aiming for 1 to 3 first target, right? And then next target would be what? Into this imbalance, right? That would be it. So if we were trading this, we already got in. And then we would be excited because from what I can see here, when this candle activated, rejected, respected structure, that would have given us that positive vibe that this would go our way because of respected structure. And then the next candle, from what I can see, is a bullish candle. At some point, traded to this area up here. So at this high, that is already like a 1 to 2.39 already. It's so close to 1 to 3 already. And then started seeing what? Down candles. And then it broke the structure. It is at this point now begin to like we'll start to think that, oh, this trade will hit stop loss. This trade might hit stop loss. You understand? Because there's broken structure to the downside. But I mean, once you're in, you're in. Not because it broke structure doesn't mean you should just close the trade. You understand? I won't do that. I don't know if other people, want to see the break of structure immediately they close the trade, right? Maybe, but for me, I would just wait and see what happens. And then what we can see here is that I think, did he get to 1 to 3? Yes. So price got to 1 to 3. And then, we now had what? This break of structure to the downside again. So now if you were anticipating, remember what I said when the call started, because I would be thinking that price should, after filling the first imbalance, the second imbalance, maybe you can get to what? The third imbalance. You understand? So I will be open to looking for buy opportunities. And when we got activated here, price, was still bullish. And then this trade actually played out, right? And then if we mark it out, this, when it came down here was, so we are going by price and time. This was 15. That is 2 hours after New York Open, right? So New York Open was 13 o'clock. That's 1 o'clock my time. And then by 3 p.m., 2 hours later, we had entry. So you were still trading in, you know, Q zone period, right? And then price went all the way to the upside, took out this high. And then, I mean, if, I was looking at this trade, seeing how it broke structure, we would be thinking that it might not get up here. You understand? So in trades like this, just like this, when it's going up like this, maybe it has gotten to somewhere here, I would just go break even. Because now the idea would be, since it has given me higher high, higher low, higher high, lower low, it might not take out this, create a new high. That is we thinking, that is we going, that is we interpreting the market based on, market structure, right? But that doesn't mean that is what smart money is going to do. You understand? Smart money still went ahead and broke structure to the upside, took out the high, swept this liquidity, and then now came down. Good for us, right? We got to 1 to 3. Exactly. Yeah. And then, so this would have actually been a winning trade, right? So this was a winning trade. Put it there. And then it filled the imbalance completely. Although we already filled the imbalance, price did not get to the third imbalance. And then what happened? It broke structure to the downside, right? Yes, yes. But as it's going up, I will go break even because I'm not sure it would actually take out this high, but it did, right? So now we had this break of structure to the downside. And so we had this break of structure to the downside. Now we'll be looking for what? Sell opportunities, right? Because now price is broken structure to the downside. And then we had in this area, maybe on 15 minutes, we're going to check. On 15 minutes, we're going to see that we had this candle. This candle swept some liquidity to the upside, right? So let's scale down to 15 minutes and see. Okay, good. So this is it, right? We had this liquidity that was swept here by the candle. All right, so liquidity to top, and then we had this bullish institutional mitigation candle that swept what? Liquidity, right? So maybe that would be the entry for after the break of structure to the downside. Yeah. Okay, we had this break of structure to the downside. So we had this break of structure. Sorry. And then we'll be looking to what? Take a sell from this mitigation candle. Yeah. So let's just say we're playing the open. All right, we're playing open mitigation candle. Entry would be at anywhere. So maybe open 50%. I don't know. This is 147.17, would be 147.20. Stop loss will just go above the wick up here. So that's about 10 pips stop loss. No, I didn't say that. Not from me. It could have an imbalance. Obviously, it had an imbalance. Can you see? There was a big imbalance after the liquidity sweep here. I got but my money, they filled it up already. So yeah, it could be correct. Okay, look at there was an imbalance there, but they filled it. So something like this, 10 pip stop loss would have been a play. Because again, the thought process would be maybe the sell has started. Understand? Maybe that sell after all those buys, I think it's now time to go to the downside. Maybe price is not going to get to what the third imbalance on the daily time frame, and then you would have this limit, and then this would have happened. It would have been so hot to see that price actually spiked you out and then moved down. This would have been so painful. Can you see? Yeah, it happens. Yes. So this would have actually been a loss. Okay, you can see they just came for this liquidity up here. They came to capture the liquidity that was here, and then price rally down. You understand? Yes, it would have been so painful actually to see that they just spiked you out and then go down. And then you'd have been now you would now be left with this thought process as to I should have removed tip, I should have removed the stop loss, I should have done this, I should have done that. No, not advisable. Okay, not advisable. Okay, take the loss and move to the next trade. Okay, we don't know if you are done this. Maybe you remove the stop loss, and then you see that it's rejecting, and then luckily this trade played out. Luckily, you'll be happy, right? And then next time you want to try it again, and then it just doesn't come back down because the moment you've agreed that you want to risk $100 and you remove the stop loss and it gets to 150, it's even going to be very hard to close that 150. And then it keeps going all the way to 200, to 250, to 300. You will close at a loss that is so big. You will close at a loss that's so big. So yes, this didn't play out. Accept it. Yes. And then it came back down. So the idea was correct to an extent, but the precision was wrong. The idea was price will get into this mitigation candle and then reject. It actually came there, traded a little bit above it, and then gave you the rejection you were looking for. But then you were not just a part of it. And it's okay. It happens. Okay. So this didn't play out. Fine. They didn't come to the daily imbalance. Okay. It is fine. Oh, sorry. Oh, what did I do? Sorry. It has to take us back to let me daily time frame. All right, so we're not just so it didn't play out, took the stop loss, and then what happened? Price rallied all the way to the downside. Now, if it was like presently now, like how because I have evolved, I've learned a couple of more things, and then if I was to trade this now, this presently, with the kind of knowledge I have now, you understand? Fine, this would have actually hit stop loss for me, but I'm also seeing something here again. Now, based on the structure that was forming inside this, potential area for distribution, I can see what higher high, higher low, higher high, higher low, higher high, and then we had a big push to the downside, and then we broke the structure, We had this imbalance that is here, some equal highs in this area, can see, and then I'd have played an entry somewhere here with my stop loss just at this high. That's how I've played it. So yes, I took a loss, but I would have, actually gotten in a gain on this trade. Since now, this is, can you see? This is the imbalance here. I'm just going to remove this. So if I'm going to trade it, my entry could be at 20. It's 20 inside. No, 50. That's a little bit above it. Oh shit. I'd have actually missed out on this trade because I would like to play 50. I would have loved to play 50. But let's say you play the 40. Okay, just 50% of it. Okay, stop can just be at this high. Okay, that's a 5 pip stop loss. 5 pip stop loss. Yes, so could have gotten in on this. And then that was the move, to all the way to the downside, right? Of course, structure work forming within the structure. Yes. And then this would have actually been a play, right? Amazing. Like pricing gonna come back there. It came back, but it actually gave a lot of peeps. But now we had that structure shift in that area, and then that was entry to go down. All right. So now price now has broken structure. All right. So now what is now the bias? Now daily we've gotten to what? A premium area. That has been established already. Now, evidence that a daily time frame retracement has ended is that you're going to see what? Break of structures on a time frame that is lower than that time frame. That is a time frame lower than the daily time frame. So now if we go back to the 1 hour, right, if we go back to the 1 hour, and we would have actually caught a very nice opportunity here, like I just explained on our 15 minutes, made like a 1-2, so whatever loss you made here, you would have recovered it more with this drop coming down, right? So that is why I don't ever try to chase price. If you take the loss, like if this hits a stop loss, just accept it, okay? Because in some cases, if you remove the stop loss like that, you might not be lucky to see it just drop. And then you feel like, lucky me, right? And the next time you want to do it again, and then it just doesn't come back down. And then if price can decide to fill this daily imbalance completely, you got in here, and then you are still in super big drawdown all the way up here, and then you yourself know what you did is not right. Understand? So losses are part of the it's part of trading. Understand? So you just have to learn to accept it. All right, so now let's go. So price started trading back up. Yes. So now what can we see on a 1 hour? So now we understand that the order flow now is to the downside, right? Price gave us this big drop. If we go to the daily time frame, what can we see? Right, on the daily time frame, price is now beginning to reject from what? This price is now, price started to reject from the second imbalance. Now we can now begin to anticipate lower pricing. So now it should be focused on what? The downside, right? What do we have? We have imbalances to be filled in this area, right? Okay. Or number one, we have all of this liquidity just chilling in this area from here, or we can just do all of this, but I can just put it as, so we have all of this liquidity resting here. So we have liquidity below, and then we also have this liquidity, all of this one on here. Okay, all of this liquidity, yes, I'm just gonna do this, okay. So now we have targets to the downside. So now, obviously, we're not going to be trading on the daily. You just use the daily to identify the directional buyers, and then go to lower time frame to look for entries, and then you catch multiple entries as time goes on. Because you have a daily directional buyers, you have a bigger time frame directional buyers, you can begin to look for opportunities in that direction. You're going to take losses at some point. You can see that trade, that buy, the buy actually played out, but the sell, it's stop loss, right? And then let's go to the 1 hour. Okay, so this is the daily imbalance we have here. Daily imbalance is here. Where you can see all of this liquidity just chilling in this area down here. Yeah, we're coming for them very soon. Okay. All right, we've already identified the structure shift in this area. All right, we have this high, low, high, and then price broke the structure to the downside, right? And then what happened? The price gave us a 50% retracement. No, it didn't get to 50%. Came close, but didn't get to 50%, and then dropped. So it dropped and created what? A new range, right? So we have this lower low, lower high, lower low, right? So this candle, bullish candle, right? Swept this high, okay? Filled a little bit of an imbalance in this area, and then price dropped. So if you wanted to trade the candle, you can see based on the structure of the market is coming in a bearish form. Right, the daily imbalance has been filled a little to this side here. So now this is the remaining daily imbalance. 1 hour imbalance is still down, and then we can see our price went up and then dumped, right? So if you wanted to trade this, you could have played the open of this candle. That would be one entry for you. If you play the open, if you had played the open, stop loss would have been too big, I guess. Okay, no, stop loss is actually okay. Open 20 level. 23 pip. Yes, so 23 pip, and then you would have actually made your 1 to 3, obviously. Right, so you made your 1 to 3 on this trade. You were playing the open of the mitigation candle. If you were playing 50% of the candle, so let's measure 50%. Okay, from here, so 50%. If you're playing 50%, stop would just go above this eye also. That's a 0 level, 15 pip stop loss. You'd have actually made, someone you just made 1 to 3 playing the open, you've made 1 to like 5. I'm sure it still went down. I think so. Yeah, so price still went down. So you'd have played 50, you had your 1 to 3, 1 to 5 on that trade. So that was institutional candle in form of a mitigation. You played the open. Institutional candle in form of a mitigation. You played 50%. One entry technique. Let's see if there's any other entry technique we can't find. All right. Is there any smart money cube? Let's check 30 minutes. Okay, so on the 30 minutes, we have this 50. Okay, no, I don't want to go to time frames that you do not have. Okay, 30 minutes. You can see we have this 2 smart money. We have this down candle, bullish candle, imbalance. Okay, this imbalance would have been another entry. Okay, so if you wanted to play the IPA, that is this imbalance here. Okay, that's from year to year, still good. Entry would be, let me see, 80 level for me. This is the imbalance. This play, let's put it at this high. About 9 pip stop loss for me, and then I'm also with you. We all took it to the downside, but then because my stop loss was a little bit small, I get to make more than you, about 1 to 10 or so, I think, or yeah, around this area. I'm already at 1 to 8. Okay, that is mitigation candle, institutional candle in form of that creates what imbalance. Let's scale down and see. Let's now go to the 15 minutes time frame and see. All right, so in the 15 minutes also, we can see we have what this imbalance here, okay, in this area. So we also have the imbalance. If you wanted to play the imbalance, entry would be, maybe you decide to play 200. I don't know if price got there. Price get there. All right, that was a good sniper. Stop up of this eye. It's about 6 pip stop loss. Okay, so different entry techniques. We are all looking to go short in the same area, and then we can see we are monitoring price action in this area. You can see our price, was respecting the imbalance, right? Price went into the imbalance and then distributed, trying to accumulate to go lower, and then we can see our price is just consolidating, but none of this actually traded above imbalance, right? This would have been another way to get in, right? So yes, because you have how do I put it? And then what time is this? This is this activated. I think the first touch was 1:15. That is 15 minutes afterwards. New York Open, you had entry, so you're trading right at a New York kill zone period. So that's why we had this. I'm not sure. I think maybe we had news. I don't know. Just check it out. I gave this drop, and then you can see price really dropped to the downside. Okay, so we feel the daily imbalance completely captured what the daily, this liquidity that is here. I mean, if you had waited, I think it came down. Yeah, it's how did it go back up? Yeah, it went down. It was just going down. It was just going down. It was going down. So you could have caught, all of this. I'm sure it went down. The price came back down. Just consolidating and all of that. And then it actually came back down. Yeah. And then we took out this Oh, came there, created equal lows. I mean, when you see this is like extra confirmation that you just hold that they're coming for you very soon. You understand? Don't mistake this for support. Yeah, and the price rejected, but then you can see the swept it. Do we also have another liquidity? Yes, that daily liquidity to the downside. Now, because the order flow is to the downside, you could have caught all of this move. I'm sure looking at all of this structure, low, high, low, high, low, high, low, high, these are opportunities to get in once you miss this. You don't have to catch the very top. You don't have to catch the very peak here. Okay. You don't have to, it's not, I mean, it's good. You caught like the very beginning of, all of this move. But then if you missed it, you could have entered here. You could have entered here. I'm sure you could have entered here. So like 1, 2, 3, 4, 5, 6, 7, 8. 8 opportunities could have joined this trade, to go down. You understand? Yeah, and then all of this move to the downside. That's like a 1 to 48 risks to reward. This would have taken a lot of days actually. This is 18th of January. This is January 27th, give or take. That is about 11 days minus weekend or so. So yeah, if we minus weekend, approximately 9 days or 7, I don't know, but more than a week actually. So you can see this split out well. So how would we have joined this? We'll be looking at the price action all the way to the downside, and then we're going to end the call. Okay, so we have seen this one played out well. All right, now let's see how could we have joined in. Oh, no. I don't want to. Yes, so we're just going to do this. Okay, so this one, that is one cell. Okay, I'm just going to lock it. Yeah. So how many sell opportunities we're able to, see? This is another 1 year, which I would have played at the very tip here. Okay, I would have caught this one also. Entry would just be maybe 0, 40. Stop it, just go. This I as about 6 pip. Okay, so this one too would have been going down. All right, so this one too. And then let's even see what happened in this area. So let's go back to the 1 hour quickly. So now we understand that the order flow is what? To the downside. The order flow is to the downside. So we're looking for sell opportunities continuously until those lows have been swapped, the imbalance have been filled. All right, so we can see this big sell to the downside. When was this? This is 1 o'clock. No, this is 3 p.m. and price. This is 15, 16. No, not in the session. So let's go back to bigger time frame and see. So now 1 hour. Okay, on 1 hour, pricing get to a premium area for retracements, because if we had seen would have marked this as the high, this low, and then we'll be looking for what sell opportunities at premium areas. So it is inside this area we can be looking for what the institutional cube imbalances and all right. But then liquidity sweep maybe on lower time frames could have seen, but then we didn't have it here. So and then we waited for price gave us this new low, and then we had a good opportunity to go lower from there. I'm going to pause this quickly. Now check again. What do you see here, right? Price on 1 hour gave us what? Lower low. Okay, and you see lower low, lower high. It broke the structure, gave us a lower low again. All right, let's see if I'm seeing an entry, but I don't know if it's actually going to be at. No problem, fam. I would say, am I recording? Yeah, I'm recording the call. I'll send it when I'm done. Okay. Yeah, so which we measure from this high, okay, all the way to this low. Okay, from the high to the low, we want to look for entries at premium areas 50% and above. What can we see here? We have this imbalance in this area. You can see we have an imbalance here.
that is at what? At premium. So we could take that sell again. How many entries have we had so far now? First one, second one, right? And then we have another one in this area. Could just play 50. Yes. Stop, we just go above this I. Yeah, that's about 16.6, 17 pip stop loss. And then we're in on this area again, all because we have what? Directional bias, right? And then boom, we wanted to capture this liquidity and capture this liquidity. So this is the first one, second one, third one, right? And then let's see. So we lock this, and then that's happened. And then we wait and see again, surprise. Okay, just gonna monitor what's going on here. All right. So our new structure level will be this, lower low, lower high, and then this lower low, right? I mean, you could catch some retracement because I can see this retracement here, lower low, lower high, lower low, break of structure in, and then you could have bought all of this, but then this would require us going below 15 minutes time frame. Understand? You could, like, if you actually know what you're doing, yes, the overall trend is to the downside. You could be selling and still be taking short-term buys and be eating TP, be closing that one as you're still selling down. You take buy, you hit TP, you close that one, still selling down. You understand? Yes, it is very, very possible. Coach, when a break or structure occur, we usually wait for the mitigation candle of the last buy. It doesn't have to be the last buy candle before the sell down. No. Okay, when they come up with sell from there. Now, is it safe to take bearish trend? Please send a markup for this. I don't understand. It's confusing me already. If you have the markup, just send it, please. All right, so like I was saying, you could have actually bought, in this area to go up, but then, it would be dangerous, but, you still caught a good buy opportunity, right? So now we want to measure from this area here to this area here. Okay, this is the old range now. All right. Have we traded above 50%? Yes, price has traded above what? 50%. So now we can be looking for what? Sell opportunities above, 50%. And we add it here. So I'm just gonna go let me do this. And then let's scale down to like 15 minutes time frame and see. This is 1 hour. We go to the 15 minutes time frame. What do we have? So price has gotten to 50%. As price touched 50%, gave us a higher low, created a new higher high, and then broke structure. So what is the structure of the market now? Maybe the 15 minutes hours wants to continue the trend lower, right? And then the broke structure, we could be looking for what? Retest to go lower. Now, did we have it? Yes, we do. Yes, we do. Right. So we have this higher high, higher low, higher high, push to the downside, and then price give us the retest. Now, what is price retesting? Price is retesting maybe this up candle took out this high, but this could be a mitigation candle because it captured liquidity, right? We had this liquidity here. Okay, or do we have any liquidity to other side? Okay, no, just this one. So this high got captured. So which candle actually captured the high? It is this candle, right? So this can be the mitigation candle, right? You can see our price came back into it and then rejected to the downside, right? So this is the mitigation candle. Okay, we could trade this. We just stop above the high. If you're going to trade this, stop above this high, entry would be 63. 63, let's just go with 60, 13 pip stop loss. You would be in already on this trade, and then you are going all the way to the down also. That is if you want to trade the mitigation candle. Now, if you want to trade imbalance at premium, because this mitigation candle is at premium, right? It will draw our fib from the swing, where's the swing high again? From this swing high to this low here, okay?
All right, the mitigation is in between what the 61, 71. That is a premium area to take a sell. So if you don't want to trade a mitigation candle, do we have imbalances? This is the 15. I'm sure looking at this consecutive down drop, 1, 2, 3, 4, it must have created imbalance. But I don't want to go to 5 minutes. I won't have the data anymore. So let me see 10, maybe 9, 8. Yes, I see it. So if you wanted to play the smart money cube, institutional cube, right? We had it here, but you wouldn't have seen it because it's on another time frame, 8 minutes. So if you wanted to play the cube, you could have played this cube, right? And then you stop above the high or this high, anyone, right? And then price got there, activated, and then drop. Do we have an imbalance? Yes, but it's looking so small. Let me see 7 minutes. Okay, it runs on 8 minutes. Or no, 15. Let me check 30 minutes. Yes, perfect. Exactly. So on the 30 minutes, I can see what the imbalance, right? This higher high, higher low, higher high break of structure. I can see the imbalance there. So I'm looking to sell. Yeah. Okay, no, this is for a buy. Sorry. Sell. Yes, so entry could be, oh, if I had played the 80, I'd have actually missed out on this, but I could, let's see, 50 level. Oh, no, I would not. I wouldn't do it. Yes, but if you want to play the open of the imbalance, you could have played that. Open is at 68, so you could just run it up to 70. Stop loss, above this eye, that's about 12 pips stop loss, and then in. So even if you were playing the institutional mitigation candle, or you're playing institutional cube, or you're playing imbalance, all three appeared in this area. You could have taken this trade and then, join the move down. Okay. Some people are in from here. Some people are in from here. Some people are in from here. Maybe you didn't catch all of these three. You could have joined them here, and then it's hope you've made your 1 to 3 already, obviously. So you just anticipate it going lower, right? Yeah. And then what happened? Have we still captured the daily liquidity down? No, it is still there. So we will still have rooms to go to the downside, right? And then what happened? This is so funny. Look at this. So price created what? A new what? Range to the downside. Right? We could be looking at this as low, this high, and then this low, and then this high. We have an imbalance here, but it's very, very little, right? So now let me go to the 15 minutes time frame. So on the 30 minutes, that's where we had the imbalance. We didn't have it on 15 minutes, but on the 30 minutes, we can see that, they didn't feel this imbalance completely, right? We still had what in this area? We had a little imbalance here. Can you see? That was where they came and then played perfectly. And then you can see price rejected all the way to the downside. So you could have caught another entry in this area. You're still in line with what structure, low, high, lower, low to the downside. So this was another entry. And then this here could be another entry. So maybe 80 level. Yeah, cool. And then stop it, just go still at this high, about 11 pip. 11 pip stop loss, and then you too join the trend down. Okay. I mean, those selling here, if their stop loss are break even, small money took them out already. And then a new entry was given to go to the downside. But let's say you're not sure about this entry. Okay. Is there any way you could have done it? Yes, there is. Okay. Scale down to the 15 minutes time frame. Okay. I can see the structure within the structure that was forming, and then the break and retest. I can see it all in this area. All right, let me see if I can go to the 5 minutes. There would actually be a play. There was a play in this area on 5 minutes from what I'm seeing. This would have been a higher high, this low, this high, this low, and then this high, and then this big drop that broke structure. This retracement would have actually filled an imbalance that would have given you the entry to go lower. I can't go back like to the 1 minute, but I'm sure there would be a play in this area. So let's see 10 minutes. Let's see if I can get it 10 minutes. Said it. So you can see, look at the 10 minutes, right? What do we see? I can see this high, this low, this high, this low, this high, boom, boom, boom. Price closed, below this, even closed below this. Did it close below this one? Coming. Okay, no, so it was this one price closed below. So price closed below this one, right? You can see we had a close below this one. On the 5 minutes, it would actually be clearer, but I can't go to the 5 minutes. So this would have been another edge. So maybe you were not sure about this 30 minutes imbalance. You wanted to be sure. Okay, you could have waited for price to give you that structure shift, which we had here, and then you could have actually taken your sell anywhere in this area. Another entry would be 50 level. Perfect. Stop loss would just go above this eye as a 10 pip stop loss. Could have actually gotten it again all the way to what, to the downside. How many entries so far now? We're not even done. Just try to make sure you get the what. Order flow. Like what is the bigger time frame directional bias? Once you get that, you're good to go. All right, then we wait. I do the retracement again. And then let's see what happens. We're going to discuss if there's an opportunity to go lower. I think I see one, but let me wait and see what happens. All right, cool. Now let's look at it now. Okay. So price was coming in a bearish form, right? We had what gave us this lower low, right? And then gave us this lower high, and then gave us this lower low. So now we have our swing high, and then this low, and then we have top range, down range, expecting what price to sell down. You guys can already see the entry, right? If you wanted to play mitigation candle, we had it in this area. Okay, and see we had this liquidity sweep here. This was smart money captured this eye, all of this by this big bullish candle, captured the liquidity. Yes. So if you wanted to play the open of the candle, boom, you had your entry. This is the mitigation candle. So if you wanted to play the open, you could have played this. Stop loss is still going to make sense. 60, maybe you just want to play the open. And then your stop loss could have gone here. That's about 10. Let's just put that 11 pip. You got in there. Okay, you could take this all the way to the downside. Right, that is one. If you wanted to play 50%, that would have actually given you a much more smaller stop loss, right? So let's see, 50% would be sorry. So 50% would be this, right? So play 50%. Could just put it at maybe we just play the 10 as a 0. And then with 0, stop loss would just go above this high. 5.5. Run it up to 6 pip stop loss, and then you're good to go again to the downside. If you wanted to play the imbalance, you had imbalance here. I mean, there was an imbalance here, and then you had it here. So if you wanted to play the imbalance, you had play this entry would be, you could just run it up to 300. Right. Stop loss can just go above this high. Yeah, that's a 6.5. Let's run it up to 7 pip stop loss, and you are good to go. Okay, then you can join them to take this lower. Okay, now we are approaching that daily liquidity. Okay, so yes, and I'm sure price came there. I didn't get you guys. You were what? I was expecting the lower high to be above that one. Which one now? Which area? I've already moved, so I don't know which one. Is it this one? Or this one? So we can see this. So, oh shit. So they came to down, but still did not feel the imbalance, like did not capture the liquidity. And then what price rallied all the way to the upside, right? And then we had this push to the downside. And then what happened? Price dumped. So how could we have traded this now? Okay. I didn't do price and time for all of this. I forgot. But then let's see with this. And the price gave us a premium entry. Let us see. So this is this high in this area, and then all the way to this low. You can see our price traded above 50%. So that is a premium area, right? We can now begin to look for what sell opportunities. Okay. We had like this high, this low, this break of structure, so you could have, this is 10 minutes. Oh, sorry, let me go back to 15. Maybe on lower time frame would have actually seen as an opportunity to go lower, maybe. Yeah. I can see what I can see here is as price got to, premium area, it gave us this high, this low. On a lower time frame, I'm sure this 15-minute down candle would have actually been multiple candles. So that would have actually been an higher high and higher low, an higher high, and then a break of structure. This week up must have filled an imbalance or mitigation or something. And then so this would have actually been an early entry. But this is 3 in the morning, so probably used to be sleeping by then. So this is no, and then this was 4, price you the imbalance and then dumped to the downside. So all of this is happening very early in the morning, right? 8 o'clock London open was somewhere here, price traded down, went up, down, and then I think 7. What news do we usually have in the evening by 7? Think that's is it FOMC? FOMC by 7. Maybe this is FOMC, maybe. So we can see what did FOMC do. FOMC, look at what FOMC did by 7. I was spiked price up to what? Feel the imbalance. And then what went all the way to the downside. So if you were to trade the news, although I don't, it could be dangerous, but this could actually be a play, right? So 80 level. Stop could just go above this high, at about 8 pips. And then now we could be looking to take it down here. So all of this down, this down, this down, this down, this down. And then wait for this all the way to the downside. And then that is it. So now price has captured the liquidity, created a daily lower low. We can now begin to look for a change, and which we had it here. You guys can see it. Can you see the shift in structure again to the upside? Lower low, lower high, lower low, entry. This will be discussion for next market structure class. Okay. Yep. All right. So how many entries so far? 1, 2, 3, 4, 5, 6, 7, 8. Yes, just like I said, 8. Yes, sir, the previous one. Let me go to the 15 minutes. I mean, if you focus a lot on EU, you could catch all of this. You understand? Yeah. So I'm sure we're talking about this area, right? If you're talking about this area, well, the reason this idea was based off this imbalance. There was a 30 minutes imbalance that was left here. So if you are playing the imbalance, your stop will go above the first wick before the imbalance. So yes, so even if you're considering this as internal liquidity, it is still okay. This trade have actually played out for you because your stop loss would have been above. And then if you waited for extra confirmation, you would have had it in this area here on a 10 minutes time frame. Yeah, so it will still be good. Even if you don't consider this as the lower low or lower high, the idea we're taking this trade based off the imbalance with respect to, structure and order flow that price is going to the downside. Right. So this should have still been a winning trade. Right. So yes, we took a loss here. Now remember, as you don't forget, because we tried to catch the very, very beginning of the sale. Remember, but then imagine how many winning trade you've had now after that loss. Yeah. That's why you should not chase price, because if you try to chase it, like you took one loss or you remove your stop loss or you do all this stuff, I mean, by the time all of this is now happening, you won't have, maybe you've blown your account or you don't have any money left in your account. You won't be a part of all of this because you couldn't keep your emotions in check because of just one trade. So be careful. Okay. No, sir. The next, which one are you talking about in particular? Let me know. I should enable annotations. Okay. All right. Annotate. Let me know which one you're talking about. You can annotate on the screen now. Okay. I've moved to the right. Let me see. Of course, that's a lower high. Did I say it's not? But then this coming from where, like looking from where we are coming from, you can see the structure already. This is low, this is lower high, lower low, lower high. This lower high here, we can't call this a lower high because this already has not broken this main structure to the downside. Okay, so it has to break and then up. So I won't be calling this a lower high. Okay, if that is what you're saying, it did not, break from the major swing, low, high, low, high, low, and then high. We were expecting it to go higher. It has already traded through 50%. Price is already at 50%, so you can begin to look for sell opportunities. Okay. Yeah. I mean, if you were anticipating it to go higher and it didn't, it's fine. Trade did not pick you, price left. It happens. Okay, it happens. Yep. All right. So coming, let me erase this. So there were 8 opportunities so far to go to the downside, and immediately afterward, the liquidity was captured. Sorry. Immediately after the daily liquidity was captured, price created a lower low. We can see how we had a shift in what market structure, right? This low, high, low, broke it to the upside, filled this imbalance. And then what happened? Price started trading higher. So this would have been the first area to get in, second area to get in. Next call, we're gonna look at how we take this all the way back, because price actually came back. Price came back to this high again. Price came back here to this high. So this is the first and the best entry you could have caught to buy this all the way to the upside. Yes, price came back there. I saw it. Or if you check like the 4 hours, you can see price came back. Can you see how price bought all the way back again? So we'll be discussing, could be looking for buy opportunities going all the way to the upside. Okay, because daily has given us a lower low. We can now begin to anticipate retracement all the way back to the high. But then looking at this sell, 8 opportunities so far to go to the downside. That's good. Okay, that was your question. Okay, yes. That means, after the sell, take it back all the way to the upside. Yes. So this is 11:47. I have spent 17 minutes past the closing time because we started 10:17. So it's complete now, right? Yeah. All right. So thank you guys for plugging in. I will drop the recording in the library group, so those that missed it can watch it. Okay, so have a nice weekend. Bye guys.